What if your biggest monthly expense could pay for itself? Rent eats up 30% or more of your income. But what if 5 simple stocks could flip that script? Today, I'm revealing 5 monthly dividend stocks that could turn your rent into a wealth-building victory. Here's exactly what we're covering today. First, I'll reveal why monthly dividend stocks crush quarterly payers and show you the psychology behind consistent cash flow. Then, I'll break down 5 powerful dividend stocks ranked from solid to spectacular, showing you exactly how long each takes to pay your rent. I'll reveal my number 1 pick that cuts the timeline in half compared to traditional approaches. Finally, I'll share 2 bonus strategies that most dividend investors miss, including a portfolio combination that beats almost every individual stock. The monthly payment psychology. Before we dive in, let me share something that changed how I think about dividend investing forever. Most dividend stocks pay quarterly, every 3 months. That means you get paid in January, then wait until April. Get paid in April, then wait until July. But here's the psychological problem. Your brain doesn't connect quarterly payments with monthly expenses. When your rent is due every 30 days, but your dividends arrive every 90 days, you never feel that magical moment when passive income replaces active income. Monthly dividend stocks solve this completely. When you see dividend payments hitting your account every single month, your brain starts understanding that you're building a real income replacement system. Plus, monthly payments compound faster because you can reinvest 12 times per year instead of 4. Stock number 5. Main Street Capital. Starting our countdown is Main Street Capital, ticker MAIN, a steady foundation for monthly dividend income. Main is a business development company that funds small and mid-sized businesses across the U.S. It pays a monthly dividend with a base yield around 6.1%, and occasional bonus payouts push that closer to 7%. Let's say you invest $90 a week, that's $4,680 per year, and reinvest every dividend. After 1 year, your portfolio grows to about $4,835. By year 10, it reaches $64,300, paying around $375 per month. In year 20, you're at $181,500, earning over $1,060 each month. At year 29, it hits $367,600, delivering about $2,140 per month, enough to cover rent in more than a few cities. Stick with it until year 35, and your portfolio grows to nearly $800,000, generating over $4,600 per month in dividends. That's not just income. That's freedom, built from 1 stock and consistent weekly investing. Stock number 4, Realty Income Corporation. At number 4 is Realty Income, ticker O, the monthly dividend king with 50-plus years of payouts. It owns commercial properties leased to giants like Walmart, FedEx, and CVS. Recession-proof businesses with strong credit. No missed rent, no drama, just reliable monthly cash flow and consistent dividends in your pocket. Realty Income offers a 5.56% dividend yield with 3.48% annual dividend growth. Year 1 brings your portfolio to $4,823, slightly exceeding your contributions. By year 10, your portfolio reaches $62,700, generating approximately $291 monthly in dividends. Year 20 shows the real power of compounding with a portfolio value of $171,900, producing about $796 monthly. The breakthrough moment comes in year 28 when your portfolio hits $315,100, generating $1,460 monthly in dividend income. At year 35, your portfolio reaches $662,000, paying over $3,000 per month in dividends. Fully passive and yours for life. Stock number 3, WisdomTree U.S. High Dividend Fund. At number 3, we have the WisdomTree U.S. High Dividend Fund, ticker DHS, your diversified path to consistent quarterly income. Unlike the previous picks that target specific sectors, DHS spreads your investment across hundreds of high-dividend companies, from tech and healthcare to finance and consumer goods. The beauty of this approach? When one sector dips, others can rise, keeping your income steady and balanced. With a 5.5% dividend yield and modest distribution growth, it's built for long-term, reliable cash flow. Put $90 a week into DHS, and in just 1 year, you're already ahead, with your portfolio reaching $4,873. Stay consistent, and by year 10, you've grown that into $71,100, generating about $325 every month in dividends. Fast forward to year 20, and your portfolio climbs to $239,400, paying you over $1,000 per month, enough to cover major bills or reinvest for even faster growth. By year 25, you've crossed $396,000, with monthly income near $1,800. And if you keep going to year 35, your portfolio tops $1 million, delivering more than $4,600 per month in passive income. Stock number 2, Sabine Royalty Trust. In second place, we've got Sabine Royalty Trust, ticker SBR, a pure energy play that pays you monthly when oil and gas are extracted from its lands. SBR doesn't drill or refine. It simply collects royalty checks from companies that do. Think of it like owning mineral rights that earn money every time oil or gas is pumped. It currently yields around 7.6%, but since it's a royalty trust with depleting reserves, both yield and income decline over time. That's why SBR is best suited for short to medium-term income, not as a long-term core holding. In year 1, your $90 per week investment builds a $4,680 portfolio, paying about $30 per month. By year 10, you've reached $67,800, earning around $282 each month. At year 20, your portfolio grows to $214,000, but income dips to $606 per month as yield falls to 3.4%. By year 25, you're at $342,000, earning nearly $970 per month. And in year 35, you've built over $800,000, generating around $2,280 each month, even as the trust winds down. SBR isn't built to last forever, but in the first 20 to 30 years, it can be a powerful cash flow machine when used wisely. Stock number 1, First Trust BuyWrite Income ETF. At number 1 is FTHI, a high-yield ETF using a covered call strategy to boost income. No options knowledge needed. The fund handles it all. With a yield of 8.8%, it pays more than twice what most dividend stocks offer. After year 1, your portfolio hits $4,680. By year 10, you're at $67,800, earning $497 per month. At year 14, it grows to $113,300, paying $831 per month. By year 20, you hit $214,000, generating $1,570 per month. In year 25, it's $342,000, paying $2,500 each month. And at year 35, you cross $800,000, pulling in nearly $6,000 per month. Just remember, FTHI trades growth for income and may underperform in bull markets. Use it as a strong income layer, not your entire strategy. If you're still here, you're serious about building passive income that could cover your rent. Here are 2 smart strategies to improve your results and manage risk. Strategy 1. Diversified high-yield portfolio. Drop Sabine Royalty Trust and focus on the other 4. Main Street Capital, Realty Income, WisdomTree High Dividend Fund, and First Trust BuyWrite Income ETF. This mix gives you a 6.46% starting yield with 1.5% dividend growth. By year 10, $69,400 portfolio, paying $374 per month. By year 25, $368,100, paying around $2,000 per month. By year 35, $901,800, paying $4,855 per month. It's more stable, less risky, and still income-rich. Strategy 2. Tax-smart dividend investing. Reinvesting dividends is already factored in. But to go further, use IRAs and 401ks to shield income from taxes. In taxable accounts, apply tax loss harvesting to offset gains. Smart tax planning can significantly boost your after-tax returns and get you to freedom faster. You now have a full blueprint to build $3,000 plus per month in dividend income, enough to cover your rent for life. The difference between those who reach financial freedom and those who don't? It's not intelligence, it's action. If this video opened your eyes to monthly dividend investing, smash that like button. And if you're serious about building passive income, subscribe and hit the notification bell so you never miss a strategy. Remember, simplify money, muchify wealth. One smart decision at a time.